Okay. Okay.
Alright, pushed. Let's see what's going on.
Gold trying to recover here.
Yes. Gold is trying to recover here, but man, great trade just before this though.
Yeah, it was. So now it begs the question: would you take it again?
I wouldn't probably take it again. Me, in this scenario, I've made my money. I'm ready to move on, kind of thing. Would you take it?
Not in this very moment. Maybe after I see a little bit more interaction with 1750, I would have a better idea of what's going on. But because of that large push down, that liquidity down, which you have to remember, when you have a market that moves down this fast in such a short amount of time, essentially what it does is it's taking out a ton of stops on people, and that is creating like a cascade of stop losses being stopped out. So there's just that's like thousands of people that just it's like a snowball. It just keeps snowballing until it finds some sort of liquidity. And what often happens in these scenarios after you had like a snowball effect like this, just like we saw in the COVID crash and in 2018, and in general, often what happens is that it takes out all these people that you would usually continue to die for, to hunt. That doesn't mean it's not going to continue down, but I think in this very moment of time, I think maximum pain is probably a little bit more up, because all the people who were gonna, all the people that were gonna sell, all the people that were gonna get stopped out from moving the market further down, they're already taken out. Of course, there's still some new participants, but I think there's a higher chance that the maximum pain right now will go a bit up. So I think it's a bit aggressive. I would wait, but it doesn't mean it's not going to turn out to a great trade. As you can see, it is like a very short-term trade anyway, but I would rather not trade in this right now, just because of how we saw earlier in the week how 1750 reacted, and that was this is the same trade. It's the same trade.
Yeah, absolutely. It's a repeat trade right here. I took this trade on the first one, right, and I had a lot of conviction to take this trade just because of the recent momentum. The level is obviously a strong neutral level that's turned to a resistance. We had previous market structure over here to the left, and we're at a round number, just a key psychological level for people at this round number 1750. So I had so much conviction to take this trade, and absolutely zero hesitation that once I saw this on Monday, I was like, this is the trade I'm taking this week. This is my trade. I am going to short this gold rock to the ground right now. And it just worked out perfectly, right? I front ran the sonar a little bit because it wasn't a sonar trade when I placed it, I don't think. But then it showed up, immediately after as a sonar trade anyway. So it's the conviction levels just increased significantly then as well. It's always nice to see. Hello, everybody. Hello. Welcome to the stream. We have the man, the myth, the legend, Mr. Asger back to join us, guys. So welcome, Asger, to the stream once more. How's everyone doing? Sound off, everyone, in the chat there. So we've got Nico, Eugene, we've got Pierre. Hello, Pierre. Loga, Steve's here. We've got Martin, Doten. We've got Warren here. Handsome men today. Thank you, Warren. We've got Dimos. We've got Nick. We've got Barry, Jocelyn, Eric. Hello, everyone. Welcome to the stream. Make sure you leave a like when you come into the stream today. Leave a like, and looking forward to having a really good stream today with Asger. So we're just looking at this gold trade, guys, that we spotted at the start of this week after this just an intense sell-off in gold, just an absolute mass liquidations here in gold that we saw, and this is why it's really important. We were talking about this earlier in the week, Asger, trading with that trend, because no one should have been long in this market. There is no reason that any break-free traders should have been part of these liquidations in gold right here. Because we're always trading with the trend. So I think that is, lesson number one. If you didn't catch this trade as it stands right now, the lesson to learn right here is to always be trading with the trend, because then you stay out of these moments here when there's just mass liquidation of retail traders that are doing the wrong things. Would you agree, Asker?
Absolutely. It's like it doesn't matter what I do. I arrive at the same conclusion every single time when I just whenever I engage in trading, and I just continuously do it, and I do it all trades. I do it all trading, and every time it just comes back to me that basically everyone in the world would be better off with their trading, no matter what kind of trading, even if they were not doing Breakfree Trading, even if they're not using our strategy, even if they're using some more strategy. It doesn't matter. The statistical edge, like the edge in your favor of trading with strong trending markets is just such a massive edge that it's just completely overlooked. Like, people just take it for granted. There's something they just hear, and they don't really understand how important it actually is when it comes to the market. So let me go through this one more time, just simply why it is that we want to trade with the trend. It is so simple that it really comes down to, whenever you have an actor, or sorry, not an actor, but whenever you have an institution, a person, a very rich person, whatever it is, whenever you have someone who wish to acquire a piece of a stock, or it could be a cryptocurrency, or it could be a bond, it could be a futures contract, whatever it is. Mm-hmm. When you have these groups of people that's looking to do this, they often they are smart about it, but they are not that smart about it. Like, they are not overcomplicating their lives. They're not gonna, the vast majority of them are not gonna run your stops to get your liquidity and move the market. Like, that's not the reality. The reality is, the majority of these people who have deep pockets and can actually move the markets, the reality of them is that they turn off if they want to buy something, if they want to acquire a position, they turn on a simple TWAP algorithm. It's a buying algorithm. It's a time-weighted algorithm that looks at the fair price for the market, and as long as the price is below what they think is the fair price, they'll buy, and they're going to continue to buy. And often this happens simultaneously, so they're kind of competing with other funds who are also looking to buy the same thing, because most of them are looking at the same data at this point. So it basically creates this big wave, a big wave of buyers that's coming in, and that's what you see when markets start to move. Just like on Bitcoin. Let's go to Bitcoin, Tom.
Mm-hmm. Yeah, I guess it's about the sentiment, right? The market sentiment changes when this type of thing happens, and then every participant in the market notices this because they're all looking at the same data, and they go, "Oh shit, something's changed here. Well, you know, let's start buying as well. Someone else has decided this is really good value." And this is what happens in fund management. You know, it happens all the time. When one fund gets something, all the other funds go, "Oh, have we missed something about this? Have we missed something about this stock? Have we missed something about this this sector or whatever? Well, we better just buy a little bit of it just so we don't look stupid." You know what I mean? Honestly, I saw this happening all the time in my career before Breakfree Trading, right? Mm-hmm. All the time. It's just like, you know, every fund has the same shit in it at the end of the day, right? It's the reality. It's the reality.
It is.
It really is the reality. Yeah. Let's talk about Bitcoin.
Do me a favor here and draw a trend line from this bottom 29,700 and draw it just like a cross section to the top of the current top, right?
Yeah, right. Like here.
Yeah, that's good enough. That's good enough. Like, this is not a trend line that's meant to really trade after. This is more to illustrate a point. Mm-hmm. Ever since that the funds who's currently buying Bitcoin, whatever large players are buying this up, ever since that switch was made, where they determined that the risk involved in buying Bitcoin versus the reward, since that changed for them and they accepted that the risk now was different, and now actually the risk was not to have Bitcoin compared to how much reward it could give to own Bitcoin in consideration of how high it could go, like the price cap. Ever since that changed, it's like very simple. It might not even be humans. It might simply just be buying algorithms, just like boom, okay, we have a new price floor. Again, we dive below $30,000 and we're finding buyers again. And this time, if we're finding buyers again at levels that was not really expected, this will be read by thousands of algorithms, and they just turn on like, fuck, this is a good place to buy. Let's buy. And as they buy, more algorithms will buy, and it just starts like this snowball effect. So what happens when it goes into this buy mode is that it creates a wave. It creates a wave of buyers. Not only the people buying it, but also the people who sold it. You have to remember, every single person who has sold, let's just say they sold their Bitcoins in the past for a lower price than it is right now, are looking to buy it back at that price they sold because they lost money. And this, you have to understand this. Every buyer creates an additional buyer. So whenever these sellers are selling, they can only sell to a certain extent, and then they're looking to acquire the inventory back. So when you have this buying spree, and this happens in all markets, just using Bitcoin as an example. So when we know that the algorithms are active and that they're buying, and that there's a strong buying momentum in any market, it doesn't have to be Bitcoin, it can be any market. When this is known, it literally changes the perception of how we should trade, because everything just becomes about, are they still buying? Are they still buying? And as long as RTD is telling you this is an uptrend and this is a strong uptrend, then we are interested in buying. The stronger the trend, the less room we're gonna have to buy. Meaning, if the trend is really strong, you are rarely going to see a pullback on 4 hour to support. Most of the time, it will be held at neutral level, just like at 37,500.
Yeah, see, like very unlikely we're getting back here and staying in a strong uptrend, right? The stronger the uptrend, the more unlikely we're getting all the way back to the bottom of this market range. Instead, we're getting to here, these 37,500 levels. So basically what Asger's saying here, guys, is that once these algorithms turn on, then every other algorithm kind of gets alerted, and every other buyer in this market kind of goes, oh shit, I don't want to miss the next uptrend. I don't want to miss the next bull run. And then it becomes almost like a self-fulfilling prophecy once these uptrends begin, because everyone's saying, I don't want to miss the next leg up, and adding more and more to their position when they see fair value in these pullbacks, especially around these key levels, right, that are outlined by X mode.
Yeah.
So this is the power of using the RTD, which we went deep into with the funded traders yesterday. We did a full, I think I spoke for like an hour and 45 minutes, an hour and a half, sorry, just on RTD, like a full masterclass on RTD with the funded traders. So
that sounds very good.
Yeah. And, you know, all about market sentiment and short-term volatility and how RTD is showing us all of these things. But yeah, it's very, very powerful, very powerful tool to have on your side, which we could see in that gold trade, which we now see in Bitcoin here. I know that, Asger, you took a sneaky long position here around 37,500, I believe. Is that right?
Multiple times even. And it's just so important for people to realize that you're like whenever you have a strong trend entering a market that you trade, just drop everything else you're doing. Like, just completely forget about it. Focus on this market that you're trading, that's in trend, and just focus on maximizing the amount of money from it. Because you can go look at any market that has that goes from like a downtrend to an uptrend, and you can just see how the trend is building with RTD and how every single pullback is being bought. Now, when you are in the time of this, and like when the time actually comes for you to buy, you might ask yourself, well, is the trend still going up? Like, are the outgroups still there? Are the buyers still present in here? And you don't know. You don't know. But what you have to do is you have to look back to all these examples of the uptrend and see every single time that it was pushed into a major level, it was bought and it was pushed up every single time. Yep. And all you had to do was buy the level. All you have, buy the level, keep your cool, don't over risk. That's what you got to do.
I guess what you're talking about is this type of scenario here. Like, in the moment, your mind is going, do I still believe that this market is still going up? Objectively, everything is telling you strong uptrend. It's telling you, you know, the objective side of things is telling you great level, strong uptrend, but your mind in this moment is what's going to screw you up and lose you that edge, right? That's kind of what you're referring to here, yeah?
Yes. And it's just so important to understand that if you can just get this part right in trading, like if you can just fucking nail this, you will literally extract all the money that you could ever want in your life. But for some reason, people fuck this shit up and they make it so complicated for themselves. And I don't blame people for doing this. Like, it's not that I blame you. I just want you to try harder, because if you actually understood the power that you're able to unlock by being able to do this, if you actually understood the power of this, you would also be able to understand where this could put you and your life and your family, and like what possibilities become possible for you. And it will also make you understand this is indeed worth putting all your time into. This is like it is worth it. And the reason it's worth it is because it can grant you whatever it is you want. And I know this sounds maybe abstract and so on, but you gotta understand that we're living in a period of time right now which is just before a major AI revolution, which might change things, meaning that it's not going to be easy for you anymore. Just the same way that the market is trading different now than it was from 10 years ago, it's gonna change again. But there is this opportunity in this very moment of this time of age that we live in, which is like a golden opportunity for everyone, basically. And that is to use this market while it's still efficient, while there's still a lot of people making mistakes in these markets, because in the future, it's simply not going to happen. The reason it's not going to happen is because of the technology that we are developing. Basically, we are solving this problem ourselves, and in the future, it's just not going to allow people to lose money the same way that they're losing money in the market today. So you have to understand this opportunity to make so much money from the market, not only in crypto, but basically all markets that's available to you. It's not going to continue like this. It's not always going to be that. This is the same way that you get a reminder that you're going to die someday. It's really important to take in, because there's many ways you can screw around in life and not pay attention while it's time to pay attention. This is the fucking time to pay attention. This is the time where we are literally giving you the tools in this very moment to trade on a very high level that very few people are able to execute without automated trading systems. So yeah.
And take advantage of inefficiencies that are currently available in the market that may not be available in the market in 10 years from now, you know, when AI and all this type of thing and machine learning and whatever is much more prevalent in the market. These inefficiencies won't be there, where you can take advantage of those retail guys that are still blowing up accounts and things like that. Yes. Because that's who we're taking advantage of, those people that are just in there to blow up their account. That's who we're taking money from at the end of the day. The ones that are in there doing the wrong things, making mistakes, blowing up those accounts. If those mistakes aren't being made anymore because of improvements in technology, you can see it in every single aspect of life. Think about sport, you know, the top sport people are better than the sports people of 10 years ago because of technology, right? And the traders of 10 years from now will be better than the traders of today because of technology. And those same inefficiencies will not be there in the market that we can take advantage of today.
Yeah. So it's just really important to have a talk with yourself and like understand the possibilities in front of you, and then have the talk. Like, are you going to screw around with this and just not take it? Are you not going to take it serious? Or You know, or you're gonna actually give it your best. You're gonna understand that this is a unique opportunity in time, and you're gonna give it your best, because that's the kind of people we want to work with. And here's the thing: you don't even need a lot of capital to do it. You don't even need that much capital to do it. All you need is a steady head, that doesn't get too greedy when you make money, and it doesn't it doesn't get too fearful when you make mistakes. And we Tom in fact is doing an excellent job of coaching people in the funding program on this. Now we do have plans to bring this to the rest of the members of Breakfree Trading. The reason that we're focusing this right now on our funded traders is because the funded traders are designed to handle literally the money in Breakfree Trading. Okay.
Yeah.
literally the wealth we've been working for years. We want to give them the absolute best conditions to succeed. So that's why we're doing it this way. That doesn't mean it's not gonna be released in the future to all members, but for now, this is what it is. They paid for it, they get it first. I think it's a fair deal. But it's just important to understand that even if you don't have a lot of money,
capital has never been easier to get than it has been today. Right?
Yes.
You know, capital has never been easier to get your hands on. You know, when you started trading, Asger, was capital this easy to get your hands on when you first started trading?
No, and you can definitely also see it just in like the country I come from, Denmark. You know, in our country, I think it was last year we started giving out loans where we're actually paying people to take them.
Yeah.
And liquidity and capital is everywhere. So that's not an excuse, and that should not be a problem. And if you see it as a problem, it's because you don't really understand how much money comes from compounding these trades again and again and again. So if you are an aspiring trader and you're like, well, I understand, but how like I have $100 to my name, or you know, whatever, like how am I what am I going to do with 3% return on $100? Yeah. Okay, I get that. That's, you can't do too much with that. But what you can do is you can send me a message with a track record of how you traded a demo account for the past 3 months, and show me what you're capable of, and then we'll have a talk. Okay? It's not going. That's not the requirement to buy the funding program. The price for that is not going to be what separates you and me together as a team for generating enormous wealth. Because if you are a trader who actually have what it takes, that is an incredible gift to yourself, but also to whichever partner that you decide to work with. So that's why we have the funding program, because we're actually interested in people succeeding and generating money for us. Like, we want you to work for us, and I think that's a really cool idea. So you have to understand, it's not about, forget the fucking money, okay? Forget the money, and just focus on the process. And the process requires you to go out, find strong trending market, and then just trade them accordingly, whatever time frame you're comfortable with.
And I think the process is about being realistic with what you've got to start with as well, right? You know, I had a really interesting message just before this stream, to be honest, and it kind of relates directly with what we're talking about right now. I just got a message. You've probably seen them all before. You probably get the same message as Asger. It said, "Tom, can I make $2,000 to $3,000 per day with this algorithm?" That's what the message was. That's all I got. I was like, okay, so just to clarify, you want to make, you know, $60,000 to $100,000 a month. That's kind of what your goal is. And, you know, I gave the message the respect that it deserves, because, you know, some people might immediately scoff at that message. And if you immediately scoff at this idea of that level of money, then you've got a belief that's twisted wrong in your head to start with, right? If you believe that that people aren't capable of making that type of money, that's a belief that you hold about it. And if you have some sort of emotional response to hearing $60,000 to $100,000 a month, then that's a belief that's going to hold you back from actually succeeding in trading or succeeding in anything, because that is absolutely realistic. You know, I've made that kind of money in a month. Asger, I've seen you make that kind of money in one trade before. So this is not unrealistic kind of numbers. So I gave it the respect it deserved. I said, cool, you know, this is what you're looking for. He said, yes, that's what I'm looking for. I'm like, okay, brilliant. You know, how many millions are we working with here? You know, what's your capital in? I said, how many million do you have in capital to achieve this goal?
Yeah.
I don't have millions. Okay, cool. Like, what are we working with? I've got 10 grand. Right. Okay. So you want to basically flip your 10 grand every week is what you want to flip it. You double your money every week kind of thing is what you're telling me here. Oh, yes, this is what I want to do. And it's just, you know, it's a very skewed perception of reality. And when you have this skewed perception of reality of what is truly capable with that level of capital, then you put yourself in a position where you can't be grateful for what actually you can do. And if you go and generate, you know, 5 or 10% in a month, you have no gratitude for that because you've got this really unrealistic idea of what's actually possible. You know, that guy, if he had $1 million or a few $1,000,000 of capital, could absolutely, you know, with the right skills, go and make that kind of money. But it's about making sure that you're grounded in the idea of what do I actually need to achieve this goal, and not fantasizing about flipping 10K every week or something like that, because that's absolutely unrealistic. You're going to lose all your money because you're going to have no gratitude for the wins that you actually do get because they don't meet your high expectations of what you think is real, right? And I think this gratitude for what you do end up getting in the market is so important to have as a trader, because if you're constantly ungrateful for what you do get, then you're never going to be able to appreciate those wins, and you're always going to be chasing after the fantasy but pushing the fantasy further and further away from yourself at the same time, because it's not a real thing.
Wow, that's good.
Yeah.
That's really powerful, Tom. That's
Yeah.
that's I hope people I hope people are taking notes, because that maybe not everyone understand why that is so important, but that is a really relatable, like that's often where I've been hurt the most, um, eh, is indeed by having like unrealistic expectations to a trade, or the amount of money, or not being aligned with the sort of goals that I'm looking at creating. So I think that's a really powerful idea you just proposed there, Tom, and I think people should really carefully consider this.
Mm-hmm. Yeah, and you know, this is what we you know, as you know, as you've even joined and enjoyed the funding sessions that we talk about this kind of stuff. But this is the level of talk that we have in those funding sessions, and I hope that the funded traders really got something out of this. You know, they're esoteric kind of concepts, you know, concepts that are really heady and difficult to kind of process. But when you do get your mind wrapped around these things, you know, this is the keys to the kingdom in everything that you're doing at the end of the day. Yeah, Euless said it feels like our early group coaching sessions, but in whatever you want to do, these are the keys to the kingdom. The beliefs that you hold about yourself, the beliefs that you hold about the world, and the beliefs that you hold about, you know, what's achievable in the market, and the reality of how to get there, rather than the fantasy of I'm off in the clouds thinking about pixies and fairies and shit. You're never going to achieve anything if that's where your mind is. So yeah.
The reason why it's important to start working with these ideas as an early trader is because if you don't start to get some sort of concept of this and understanding what's going on in your mind, and like what is gonna give you a bad trading session, what is gonna give you a good trading session, like if you're not working with this kind of stuff, and let's say you get lucky and you do flip your 10K to another 10K or whatever, you know, the problem you're gonna face down the line is from not understanding this kind of position that you're putting yourself in by having these thoughts, not understanding that you're actually thinking these things, and not understanding that by thinking these bad thoughts and these bad ideas about expectations of trading, by thinking of by not being aware of this, you are potentially in a position to lose everything in your account.
Yes,
and
absolutely.
and it's one step wrong and you are already tilted, you know. It's like one, and you might even be tilted by the very moment that you come into your trading session. You might have you know, it could be an external factor and you're just not aware of it, and then you start trading and there's just something off, you know. You're not trading like you usually would, and so on. You're not even thinking about it, You don't even, everything that you knew is just out the window. And when you get to a certain levels where you're working with 6, 7, 8 figures of capital,
yeah,
I can tell you, it's very expensive, and it's very expensive, and the billions of dollars have been lost this way by single actors, like single people, meaning people on a very high level who on a very high level of funds, we're talking people who are managing billions, have these absolutely breakdown and meltdowns where they lose 400, 500, 600 millions of dollars. And that's like, it's completely unacceptable. It's not even supposed to be able to happen, but yet it happens. And it will all come back to some sort of people who are leading the fund or is involved in the decision making, who have skewed expectations, and they're just not aligned with the risk involved. So it's really important that if you want to succeed as a trader, that you start working with these ideas. Now, I think we need to do a better job of getting people on board with all your great information, Tom, about this, because it's like, it's not only trading, it's generally in life. If you it's like we're talking about life lessons here, but the difference is that usually when it comes to life lessons, it doesn't, usually it's not life or death when you make a bad decision where you're impacted by something, or you're not aligned with your goals, or you're not aware what's going on in your head. Usually it's not life or death situation, but in trading it is very much life or death, and it can very easily go from like a casual 200K in your account to just literally $0 in your account. I have seen this. So very important to incorporate these ideas.
Yeah, absolutely. And when, as you level up more and more and more, you think that you're going to become comfortable with seeing these type of losses, because as much as the big wins and the massive months are euphoric and great, there's a big difference between euphoria and gratitude, because euphoria is when you have a really fantastic month and then you get really heady about it and you believe you're the king of the world and you go out and start spending money and it doesn't matter. And when you get on the drink, you start telling everyone how much money you made in that month and all these kind of things. And then you just get absolutely wrecked the next month. You get wrecked so hard, and it takes some time to recover. And I know you've been there. I know I've been there, Asger, where we've lost like a lot of money, had great, massive winning months, but big losing months as well. And these things really pull you around. Like, it's like someone grabbing your emotions and just yanking it from side to side and shaking you around, kind of thing. And as these swings get bigger and bigger in terms of the wins that you have and the euphoria that you hold and the losses that you have and the despair that you have about those losses, the harder and harder it is you're going to recover from those things. And the more you're going to ingrain those into your subconscious mind and hold them as beliefs, hold them as, fears of the past and fantasies of the future, and be chasing after the fantasies and then running away from the fears. And when you get into that position where you're chasing euphoria because you think it's gratitude and you think that euphoria is, the thing that you need to experience in the market, this is when you're absolutely going to get wrecked, because you're going to just materialize the opposite all the time in your account. And that's when, 6 figures becomes zero, because you're just chasing after that next big hit of dopamine into your skull, basically. So it's very, very important to be grounded in gratitude and not off in euphoria and in despair.
Now here's the good news. Here's the good news about this. 95%, okay, I'll say 99% of the retail traders that engage in the market on a daily basis, they have absolutely no fucking idea of any of the things that Tom and I would just talk about. They have no idea. And that means you can use it against them. Do you understand? It's basically an exploit. It's basically like a cheat against humans. Okay,
this is another addition to the edge, right? You know, we spoke about the trend being the edge. This is an edge in itself.
Yes.
Yeah, that's what you're saying. Go on. Sorry.
No, but it's very true. So like what does this usually look like in the market? What does this usually look like in the market when we're talking about like an edge in a sort of like psychological dilemma where we are able to see people just doing irrational stuff that have absolutely no reason? Well, it is people who basically counter the strategy of our strategy. They're basically doing the opposite. They are usually tilted people. Like they have no fucking clue what the fuck is going on, but they might have some belief in their head that they know what they're doing. But if they are not, I promise you, if they are not aware of the fucking shit going on inside of their head, like if they are not aware of what's actually happening in there, it doesn't matter really how good their trading strategy is, how good their system is, how much money they made. Okay, it doesn't matter, because it will come back and it will eat them alive, and they are not gonna know what hit them. Like they're just gonna be standing. It's just gonna be like a train, and it just runs them over. The reason I'm saying this is because in 2017 I was day trading actively every single day, maybe 8 to 9 hours every single day, and I would have alarms in the middle of the night. I would basically do every single thing wrong that you could really do. I'll be trading on the low time frame, just reading price action, trading, looking at 1 minute, 5 minute, 50-minute time frame. I had some idea of what was going on in my head, but when it came to execution and trading my strategy and so on, I knew something was going on in my head, but I couldn't tell you when I was tilted. I couldn't tell you when something. I could tell you how I felt and so on. But what I can tell you is that what I did for that year, this was during the development of XMod as well. What I can tell you what happened was that I just kept getting fucking run over. Even though I had XMod and I could see in front of me what was going to happen, I just got fucking run over by the train. I don't know. When I say run over, this is called like a wrecked account, and it probably happened, I don't know, 40 times in 2017 in that year of like just accounts blown. And I just, this was during like my research and development of the XMod strategy, and I was just like, what the fuck? I can see what I had a very good idea, and I knew I was onto something, but I wasn't good at putting anything into practice about my emotional awareness of my mindset, really. Like, it's just, I couldn't recognize my own state. Even though I had my timeouts from trading, I wasn't capable of really understanding it. So it's really important that we start to grasp this idea and we start to understand how our human mind is interacting. Like, the first thing we have to really realize, like the first thing you got to think about basically every fucking day that you're waking up for the rest of your life, every single fucking thing you have to think about when you wake up is that the world is not in fucking riot. Like, it's not. Somehow the fucking earth is still standing, and people are still going and doing what. Okay, we have COVID, but beside that, it's still somewhat standing. So okay, the world is standing, but what the fuck is going on? Because human beings are creatures designed to fucking work as a caveman, to go and hunt on like a very basic level. Like, we used to be happy to wake up and we would go and we would collect some fucking berries. Maybe we would, get a fucking pig and would kill it with some stones. I don't know. It doesn't matter. This is what we used to do, and we would get a sense of fulfillment from doing very simple stuff that today just doesn't make sense to us. Okay, so we would get like all sort of fulfillment. Our brain would tell us like, here, have some dopamine. That was a good job. You fucking nailed that pig. Now you got food for 2 days. Congratulations. And that was it. That was peak euphoria for humanity at that time. It was like, that's fucking great. We got the pig. Let's go get another one. And that was very doable. Okay, that's the sort of environment that our brain is designed to operate in. We are basic animals. We are a stepping stone away from a fucking chimp. Okay, so that's the kind of environment that you're supposed to be in. So when I say, when you wake up every single day and the world is not in a fucking riot, and there's no one in your fucking garden looking for pigs or whatever. What I'm saying is that somehow it's still standing, even though it should not be, because no one is equipped to be in this fucked up world. We're living in a time we are not designed to be. And that is when you start to understand this, like every single day, like why the fuck we are monkeys and we are driving cars on the road. What is going on? Like we're not supposed to do that. We're supposed to gather fucking berries in the forest, you know? So when you start to understand that we as humans are not designed to operate in what we're putting in front of us every single day, you can also start to have some compassion for yourself for which shit is not going right, because it was not supposed to go right. You're not even supposed to be here. It's not even supposed to be. So understand and take in that you are not supposed to operate in this world. You were not designed for this world. Your odds of success is almost like none. Okay, so if you start to understand and you approach trading with a mindset of I'm not even supposed to be doing this, and secondly, I'm not supposed to even be winning, you can start to put on every single fucking trade that you take with an idea in your mind that you're not supposed to do this. Somehow you're doing it. Somehow you won a trade. Congratulations, that is incredible. And then you can start to think about like what sort of twist to your complex interior mind that's going to happen from being winning trades and losing trades. You're supposed to get a food, now you're getting dopamine releases from winning trades. And then you can start to understand why humans fucking suck at trading and why you can use it against other people who hasn't had this realization, or who perhaps had the realization but forgot about it again. Because that's the hardest part. You can listen to all this information that we are saying, you can listen to it, you can take it in, and you can understand it. But to apply it in practice and keep reminding yourself of the dangers of your mind that can deteriorate from trading, like it's really important to keep in mind, okay? So that's my rant, Tom.
That's your rant. Very nice, mate. I mean, I didn't want to interrupt you at all there because you were on an absolute roll. Let's give you a little bit of a break, and I'll go to some questions here, and I'll let you get your breath back, have some water, whatever you got to do. So I've got an RTD question here from Eric. So I'm going to jump into the 4-hour time frame on Aussie dollar, Swiss franc, AUD, CHF. You know, while you're listening to what Asger just said here, and while you were listening to what I kind of said before, you're probably thinking like, what has this got to do with trading? But this has everything to do with trading. It's the entire game. It's the whole game of trading, basically. So just accept it for what it is. If it's a little bit, over your head or whatever, just take it for what it is, and maybe come back to this video and try to digest it at another time. So Eric is saying, can we look at Aussie dollar, Swiss franc 4-hour on 4th of August at N? It is supposed to be in downtrend, supposed to be. I'll get to that. But it went up to R. Could you share your views? Okay, so 4th of August here. 4th of August, we're back at this point here. Okay, so when you're saying supposed to be in the market's not supposed to be doing anything at the end of the day, right? The market is supposed to be doing exactly what it does at the time. The only truth in the market is what's going on right now, what this candle is telling you about, okay? So be really careful about using supposed to be. What it basically means that, we've got a downtrending market that pushed into a neutral level here is something went wrong and traders didn't step in when they were supposed to step in, all right? Selling pressure didn't step in when it was, when we thought it would step in. So what that means is what we're doing now is we're just looking for another level to trade around. Okay, we're looking for another level to trade around. My thoughts here is that until this local crosses above the global, this is still a reasonable short to take. I would love to see this just get really euphoric and pump up very quickly before dumping out very hard from this level. And I think it would be a nice trade to take. Absolutely. Okay. So don't worry about this trade back here. Don't worry too much about that, and worry about the next opportunity that's in front of you, basically, Eric, there. And I think it's a good-looking trade. I think it's a good-looking trend, 98%, and it's a good-looking trade, okay? because if we look on the 1 day time frame, let's take a look at what's happening there. That would be coinciding with this neutral level right there, which is really a very key level in the market. And you can see how the market previously reacted to that level and the price action around there, and how bearish this move was. And when we had the retest, we had another bearish, very bearish move out of this level with this wick off the level as well. So this is really bearish looking price action. So sellers really stepped in at that level. What I would say is if sellers don't step in at this level again, then we're probably looking at an invalidation of this trend, because it's very likely that the local is crossing over the global at that point, okay? So let's say something happens like this, it pushes through, then we see the local cross over the global. This is telling us, okay, we're stopping looking for short positions now because the local is crossed over. The trend has become compromised by the short-term volatility, and we're waiting for the market to show us its hand and what it wants to do next. If it very quickly retakes this level here and we get back below this level and the trend re-establishes itself to the downside, then we look for that retesting continuation again after that, okay? So these are my thoughts when I'm looking at this trade on the 4-hour time frame. What do we got next? What do we get to learn about the trend indicator? When do we get to learn about the trend indicator? So in the academy there, Gino, there's a video called RTD and X mode where I talk about what RTD is, what X mode is. Basically, you know, the RTD is our proprietary trend algorithm that gives us an idea of long-term macroeconomic, not macroeconomic sentiment, but long-term macro sentiment in that market being the global trend, and the short-term volatility of that market as well being the local trend. And the interaction between the two gives us an overall trend that we use as our bias when we're trading, okay? So that we can trade with that overall market sentiment like we were talking about before.
Maybe, Tom, you should just show real quick where the academy is located.
Oh yeah, for sure. If anyone has not been in the academy, okay, you can see over here on the right side, there's this little hat icon here. If you click on that, it's going to take you immediately into the academy. You can expand that out a little bit more, and then you can start playing these videos here. And if you just click next, it's going to take you through those academy videos. If you click this arrow in the top left corner here, it's going to give you the list of the academy videos. You can see we've got week 1. We've split this into week 1, week 2, and then extended content, okay? So week 1 is basically the overview of what we're doing here, why we're doing it, why the algorithm even exists in the first place. We're setting up our broker accounts, and then we're going in and we're placing our first trades together, okay? Then in week 2, we're going a bit deeper into the algorithm. We're going into, like I said, using the RTD, having a look at X mode, how to manage trades once we're in them. We're looking at risk management. We're looking at how to hedge, these type of things, going a little bit deeper, all right? Once we know how to actually trade using the algorithm setups. And then in the extended content, Asger goes through all sorts of things like naked price action. He talks about why support and resistance are things, you know, why they're so important in markets. Like I said, he's talking about price action here. He's talking about candlesticks. He's talking about chart patterns, doing some trading using X mode, basically going deeper into X mode here in the understanding X mode section. But what you want to do if you're a new trader, you just want to go through here from start to finish, and it's going to give you a very clear process in terms of, you know, how to begin your learning in Breakfree Trading, from just very simply having nothing more on the chart than just the strategy mode and going and placing those trades, all the way through to, you know, how to pick the best trades to take, how to manage your risk, how to make sure you're not overexposed to individual markets, how to make sure you don't have too much correlated risk, getting deeper and deeper and deeper as you go so it doesn't overwhelm you, okay? I think it's really well constructed in terms of the content we have here. It's just a matter of people actually going through and watching these things. A lot of the questions we see in the global chat, a lot of the questions we see in, you know, these live streams here are a matter of people maybe watching this one video here. And mind you, I have the data on how many of you watch these videos. So I know that a lot of you watch this video here. You absolutely skip this one and this one. Some of you watch that one, maybe half the people that watch that first video. And then almost no one watches the week 2 videos. So
Such a shame.
It's such a shame. It is a real shame. And not just because, you know, we put a lot of time into making sure this is a really great onboarding experience for you so that you get the best out of using our incredible tech that's really going to empower you in these markets. But it's more a shame for yourself. Like Asger was saying before, you know, we're living in a time where we have this window of opportunity right now. We've got a window of opportunity where there is still, you know, inefficiencies in these markets that we can take advantage of. Peoples, they call themselves fucking apes, right? These are the chimps that we're trading against. Those apes with the fucking diamond hands that are making mistakes that we're going to take advantage of. Yep. If you don't take this seriously now, you're not going to have the opportunity to take this seriously anymore in, you know, 5, 10 years from now. So taking this seriously is going through, digesting every single video of the Academy. You got to remember, I was in your position when I first started with Breakfree Trading. Asger was my trading mentor back then. Yes, I did have more personal one-on-one time with Asger because no one was part of Breakfree Trading then. I was one of the early adopters. I was one of the innovators who first joined as a paying subscriber. So I had that benefit, but I'm passing on every single piece of information that took me from a complete noob trader to having 5-figure P&Ls in a month, right? So, what I did when I first started Breakfree Trading is I watched every single one of these Academy videos, and I watched them 3 times. All right, I watched all of these things 3 times back then, back in the day. So if you're not doing that, you're really doing yourself an injustice and a disservice because so much incredibly important information is in there. Even in those old videos from 2019 that Asger filmed, the information is still as relevant today as it was back then, regardless of the platform that he's doing it on. Okay, it's a real injustice that you're doing to yourself. And if you really take this seriously, you got to ask yourself, am I going to take this seriously now? And if you tell yourself yes, then you need to actually prove it through your actions of going and actually digesting that content. The old videos were hard to watch. Fucking hell.
Well, I'm sorry. I'm sorry. My accent is not that good, and I know, and you know, but yeah, they are what they are. But I think there's some information there that will help some people. I think there's some information there that will definitely help people. But yeah, get your hands on, like get started, and just sort of, you know, just put your first trades on and just get an idea. Yeah, I know people want to sign up for Breakfree Trading and just plug in and play and reap their 5% a week or a month or whatever. But what I'm saying is that there's something much deeper here that's available to you that you can learn from this, that you can take advantage of. It's just like, it just seems like people don't care, but they don't understand that there's literally so much money to be extracted from these markets right now. It's like doing the fucking gold rush in the US, you know, originally when they found out there's gold everywhere and everyone was just digging for gold. Well, this is kind of the time before they went through. Like, yes, a lot of all the good alpha, meaning all the money that can be extracted from the market, has already been done. Like, a lot of that extraction process has already been fixed and taken, but there's still a lot left. There's plenty, especially if you look to crypto and like this. There's an abundance, and what we're telling you is that we're giving you really good tools to extract this. It's just not that easy. Okay, it takes time, but it's definitely worth it. 100%.
Yeah, for sure. I guess what Asger is saying here is throughout history, there's been points where inefficiencies present themselves and, you know, golden periods in all different industries, all different sectors around the world. If you think about, you know, those traders, or no, sorry, not those traders, but they were traders, you know, those really successful people, you know, those ones that had the ability to pull oil out of the ground when no one fucking else in the world could pull oil out of the ground. That was an inefficiency in the oil market that person was able to take advantage of. Who was it? Was it Rockefeller or something like this that was the oil guy? I'm not sure. But that was an inefficiency in that market, okay? And what we're doing here is we're identifying an inefficiency in financial markets that we're able to take advantage of, all right? And by empowering yourself using our tools, we put you in a position to take advantage of those while that inefficiency still exists, because it's not going to exist forever. Every inefficiency is filled by more market participants, and as more market participants come in, as more oil people come into the oil market, that edge that Rockefeller had at that time goes away. The same way that Warren Buffett's edge when he first started out his career was finding the absolute most trash companies in the world that he could go and buy for $1 million, but he knew that they were worth 2 million, but this person just wanted to get rid of it, but he's the only one who knew about that company. That's where he found his edge, okay? He was a trader, right? Warren Buffett was a trader. Yes, his time horizons were different, but he identified an inefficiency in a market and he capitalized on that inefficiency. As more market participants came in with more advanced tech, what happened was that inefficiency, that gap closed, where there's 1,000 eyeballs on that same company instead of just Warren Buffett's eyeballs on that company, all right? So what happens is that price gets bid up until it reaches the market value of $20 million. There's no edge there anymore. There's no inefficiency in that market. If you go and look at any successful person, you will identify, not any successful person, but these really, really successful people, the true innovators.
They found an exploit.
They found an exploit. They found an inefficiency.
They found a hole and they just maximized everything they could from it. So let's get the last questions in. Let's see.
Yes.
We have Eugene, who has best practices for multi-timeframe analysis, for example, on 4. What time frame would you check to confirm your thesis, and what would you look for in other time frames? Well, okay. What you want to look for in any market on any time frame is how the price action is interacting with X mode. And then you want to have a good idea of what the trend is, like what is going on in the market. Is it going up? Is it going down? Long term, like what am I looking? I'm looking to buying, I'm looking to selling. RTD does that for you. RTD does that really, really well, better than any other thing that I've ever used in my life. So you don't need to think about, do I need to buy or sell? That is already solved, okay? RTD takes care of this. It tells you if it's an uptrend, you're buying. If it's a downtrend, you're selling. If it's sideways or if it's a weak trend, you're not doing anything, okay? You can, but it's more profitable not to do anything. So if you turn strategy mode off for a second, Tom, let's go to 15-minute time frame. Okay. So what we want to see at any given time when we are working with these markets, and the sort of idea you really want to bring to multi-time frame analysis, is that you want to see how is the price interacting with the levels. Like right now, this very second, you can see that AUD CHF shut off from that neutral level. It didn't quite touch the resistance level, yet it still got sold down. Now look at the level that it's interacting with right now. It's a level that's currently being built, but nevertheless, it is there. What we're seeing is that we're seeing buyers step in. So who the fuck is buying this shit up at this level? The fucking T-Warp algorithm. The reason that this is spiking up so much right now is because there's a competition for the liquidity available. Just imagine 5 different robots all trying to buy this at the best price possible. Eventually, they start just running the price up until it gets to the price where they're like, okay, this shit is overpriced. I'm not buying anymore. And usually, this happens at the same time, and that's why you see these spikes which then it spikes, and then suddenly, like for no reason, it just stops going up. It just stops going up and it starts going back down. And it starts going back down like it was in the past. And you look to this and you'll be able to see, and the way you explain that this spike it has is basically, it's a deviation. Okay, that's what you call it. It's a deviation from the trend. So what you want to do on any given time frame is that you want to look and you want to see how it's interacting with the levels. Now, how it is interacting with the levels will tell you whether this market is behaving according to our expectations or not. If it's not respecting the levels in a reasonable way, meaning that whenever it is encountering an X mode level that is supposed to be a resistance and it just cuts straight through it, that doesn't mean it was a bad resistance. It just means where we expected the sellers to be, they weren't there. Or the buyers just simply took them out, like the demand was just much higher. So if you do see this, where something is reaching a resistance, for example here, and it's not really being rejected, that is an immediately a red flag telling you something is off. Whether it's someone that's just buying, regardless of what cost it has, whatever the reason is that they're buying it, you can just see it's not respecting the rules of how usual price action is interacting with resistance. And because it's not respecting this, it's telling me something is wrong, and I should not expect it to really I should not expect the next levels either to interact this way, because I want to figure out what is going on. Okay.
Right, and then we're looking up the time frames to find, you know, a more important level, because this resistance level here on the 15-minute, right, is probably like nothing on a higher time frame, yeah?
Well, yeah, but it's still important, because that resistance level is gonna let you know whether it goes to that neutral level or not. And as the more that you're watching this, interact, if you try to go a little bit more up on the chart, the more you're watching this interact with this resistance level, the more you will have an idea of what sort of buyers are active in the market. The better idea that you have what sort of people is on the other end. You can also do this with order flow. Now, we don't talk so much about order flow, because I think price action really is like the number one thing you have to get an idea. Again, price action is these candles on the chart and how they're closing, how they are interacting with these levels. That is what matters. This is literally the key to everything. Okay, if you understand this well enough, you basically don't even need strategy mode. You can just trade from this. That doesn't mean that you should trade against the trend. You know, that's not what it means, because that's not our strategy. What it just means is that the more that we are watching this, for example, what I can tell you right now with very high certainty is that if this market at this very moment starts to dive down and it takes out that NN level and it goes below this level and it closes below this level with a 15-minute candle, I can tell you that the probability of it hitting that neutral level below it, the 100% alignment, is very high. It is very, very, very high, and that's just due to the nature of how these markets are penetrating different blocks of orders, and then often, you know, these bots buying it or whoever is buying it suddenly realize, okay, this is just not a fair price anymore. This is outside my time weighted price, so I don't want to buy them. I'll stop buying. And what will happen is that sellers are gonna come in, and as sellers are coming in, shorts are going to come in, and you want to very carefully monitor when it reaches that. Let's say we're playing a few steps ahead. We're saying it closing below the neutral level, the NN level, and now what we want to see in order to determine is that we want to see what sort of buyers are available at that neutral level. Because if this is a TWAP algorithm running, we should see the buyers come back in at this level. Now, if it goes through that neutral level, the 100% alignment level, if it just, when it comes down to this level and it just punches straight through this level, highlight the level below, Tom. Yeah, exactly. If this is the case, it's telling me that whoever was actively buying this before, they're no longer active, because if they were active, they would clearly be buying at this level that they were just buying at before. But often when we have markets that's deviating from its natural course, like the usual trend that we're expecting with RT, often when this is the case, you will see some sort of blow off top, exactly because of a liquidity thinning and multiple buyers trying to buy it, and suddenly it just runs out of buyers or the liquidity runs out, and you see these sort of moves. Now, other people will explain this and say that it's because of news or whatever. I don't give a fuck about the news. In my opinion, I will tell you the news based on the chart. Okay, I will tell you whether good news or bad news for the Australian dollar based on what happens in the market, and then you can go look it up after. That's how I view it. So we want to carefully. This is what I did for so long. This is what it was literally my life. I did nothing else but just watch this every single day for fucking years. And yes, I didn't have a life. This was my life. I was eating dinner in front of it. I was working in front of it. I was looking at it. I was looking at my phone. If I was outside, I was still looking at my phone. I was literally addicted to watching these markets. And what has come from this is this understanding of price action interacting with expectations of the level. Okay, that is what has come from it. And this is, if you start to look at this and you just start to pay attention how the levels are interacting, even all the way down to 1 minute time frame. If you start to pay attention to it, you will see the patterns and you will start to get an idea of when big moves are about to happen. You'll also start to get an idea of when you have a really good opportunity to make decisions that can make you a lot of money. And what I mean is, for example, right now, if AUD CHF were to be trading up around extension 1, like if it was trading, let's say it had already touched extension 1. It already touched extension 1. It had pushed back down to resistance level, and then it's back up at extension level, and now it's fucking around extension 1. I can tell you, like this very moment, there's a very high chance that this market is about to make a big jump up to that neutral level. And I can tell you that because I know that there's currently buyers buying this at extension 1 where we're supposed to find resistance. And that means once that extension 1 go and it touches extension 2, that very second, XMOD is going to do a range expansion because it's expected of the market to do that range expansion, and it's gonna make a huge move. Now we don't engage in these moves the way that we buy it like a breakout trade. We don't do that because that's stupid, and you lose a shitload of money this way. So we're not gonna buy into it. I'm just saying, from observing this, it can tell you how likely it's gonna be that you're actually gonna get that short entry on the neutral level, on the daily level. And I know this from watching the 15-minute time frame because I know that it's working against the extension 1 level. And from that, I can tell if this extension 1 breaks, that means extension 2 is going to go, and that means it's going to push. Where is it going to push? Let's go to daily time frame. Where is this shit going to push to? It's going to go straight to the neutral level. That's what the next resistance is, and that's exactly the kind of push I'm looking for. And that is what XMOD is able to do for you. But it takes time to understand it. It really takes some time, and you need to study this. You need to understand. You need to trade it. So that is the multi-time frame analysis that will literally change your life if you do this enough and you spend time on it and you take time to understand XMOD level interaction and price action. Okay.
Very good. Very good. All right. Let's do one more and then we'll sign off. Hey, Tom Asgard, CAD Yen 1 day sell trade hit stop loss. My thoughts: if market continues down and breaks the end level, we give this a second chance at the retest of end level. What do you think, CAD Yen? Let's just quickly. I mean, from the perspective of what you're saying, it sounds reasonable, but let's have a look. CAD Yen 1 day time frame. What you're saying is if you see price just dump back below this level, retest it and continue to the downside, that being your trade. Right now, we've got a weak downtrend. It all depends on how the market takes this level. If this level is taken with a lot of bearish sentiment, right? If we have like a lot of bearish price action around this level, let's say that like no buyers step in at this level here, okay? The market just absolutely dumps through it very, very hard. We have like a bearish engulfing candle down through the level or something like that. Then maybe it's reasonable to take, but overall it's just been fucking around here like way too much. In my mind, it's probably just going to fuck around here some more. Probably this trend just continues to collapse, turns into a sideways market, then it's just like a coin toss of which direction it's going to go. Right now, until that does happen, until we see the RTD absolutely signal to us, okay, we've got a down bias, like we've got a very, very clear down bias, I don't even want to put a second thought to this market. Like, I don't give two shits about it. Like, objectively, this market means nothing to me. So I'm going away and I'm finding another market where I've got a strong uptrend that I can trade around, where I'm not just fucking around here constantly with this level, where, you know, the buyers and the sellers at this key battleground are actually making a decision of what's going to happen next around one of those strong trending markets. Overall, it just looks like a lot of chop around the level, so I'm probably just going to leave it alone. Would you agree, Asker?
Yeah, and I also think about the. I haven't seen the specific trade, but of course I can imagine what it looked like.
Yeah,
now,
probably.
Yeah, something. Well, it's already stopped out.
No, it's stopped out. So it's something like this here. It was just to that there. Would have just caught stops there.
Yeah. So what I'm seeing in this market and what I'm seeing in the price action is the interacting with the neutral level. Now I don't see it below this level. In my point of view, this level is showing price action that's a red flag for not only. It became a really red flag by the time you had that bullish candle engulfing the neutral level on the 5 candles back. Tom, if you highlight that candle, you can see. No, you don't have to. Yeah, exactly. Five candles back. That. Yeah, exactly. The second, so the reason that this candle is problematic for a current position, if you're already short, the reason that this is problematic is because of the previous price action that is happening above the level. Then you start to get some fuckery below the level, and then above the level, and then down again, and then this is the problem. Every single time that we are not trading below the level or above the level, meaning that it's indeterminate between the level, and the level is basically not, this is exactly what I just talked about before. The level is not interacting with the price as we expected, because we want to either see the price above the level or below the level. We don't want to see it fuck around. Every time it starts to fuck around like this, it means that something is off balance. It's not good for us. Okay, it drastically reduces our chances of winning. So the reason that the fifth candle, the fifth candle back is a big problem is because that once this market went below the neutral level, we fully expected it to reject it when it came back up touching it. Okay, that was the expectation, especially after so long consolidation where it already have been fucking around with the level. Like this was already a problem. Where Tom is highlighting right now, this was already a problem here. Okay, already that's already bad. That's already, like, from our ideal situation, that's already looking like 2 points out of 10, if 10 is the best. Okay, so let's then say, okay, fuck it, let's force a trade on this shit. We will trade this market no matter what. Okay, it would go like, hey, once this dives below the neutral level and it closes a candle below, and we can see that there should be sells to expect it at the neutral level the next time I touch it, we can build this expectation to the neutral level, even though it's already chopped up, which means it's a worse trade. We can still say, okay, once it goes below this neutral level, it should really reject it by the time that it comes back up. And then the next interaction with this level, completely takes it out. There's absolutely no sellers available here to sell this down. There's no one available. If the sellers were available, the candle wouldn't have closed the way it did. Then the candle that comes after that, the fourth candle, is showing us again there's absolutely no one selling this shit. So it's bad. It's not good. We have no sellers and we're in a position. It's not good. That doesn't mean we just exit our position. That means we try to get out of break even. Okay, we move our TPs to break even. We try to get out of it. Sometimes doing this, sometimes making this decision to move our TPs to break even, meaning we try to get out the trade where we got into it. Sometimes this will cost you money, meaning that you get out the trade and then it goes to TP. That's too fucking bad. That's just how it is. Sometimes you just don't get the entry. Sometimes you're just unlucky. But what's much more important in trading is, rather than playing great offense, we want to play great defense. If you get 2 points from, if you get 1 point, if we give points for what you can do in trading, then it would be like you get 2 points for saving your money, and you get 1 point for making money. Okay, that's the priority. We'd much rather save our money than take a risk that's unreasonable like this one. So that's why this setup was a bad setup for quite some time, and you could have known this by looking at the interaction with the XMOD levels all the way from 1 day down to 4, 1 hour, 15 minutes. I promise you, you will find that it's not interacting with the levels like we expect it to, and it's just not looking. You will be able to see in the pricing, it's not respecting it like it should. Now, if we look at it now on 15-minute time frame, something like that, Xmode will have adjusted to this, but it's still telling us that it's just not what we expected. You can see it again. Here we have the consolidation into around resistance and extension 1. We have a consolidation above there. It's not behaving. It's not behaving like we expect it to behave, because we do have the rejection for extension 1, like we want to see. That's good. But the way that it keeps fucking around in such a tight range, like you can see, it's almost retesting extension 1 again and again and again. It's only supposed to, it is supposed to test it 1, and then it's supposed to fuck off in the opposite direction. That's what's supposed to happen. Now you can see that this is just going up, down, up, down, up, down. So again, you will be able to read the price action interacting with the levels very early on. You'll be able to see whether it's doing what it's supposed to do or whether it's not doing what it's supposed to do. And this will tell you, this will give you such a huge edge as well. But the dangers of doing this is that when you start to engage with a low time frame market interaction, meaning you're looking at the levels, you're trying to do what Asker told you to. You're trying to look at the market on low time frame, how it's interacting with the levels. You don't know what the fuck you're doing. Okay, you just don't. You have no fucking idea what you're doing. But that doesn't mean you can't learn, and you have to start a place. Okay, you have to start somewhere with this. So you have to accept that you're gonna make some guesses. A lot of them are gonna be wrong until you start to get the hang of it. A lot of them are just gonna be plain wrong, and that's okay. This is a cost of learning, and you have to accept this, and you have to tell you this, and then you have to remind yourself you're not even built to do this shit. You're supposed to be out gathering fruits in a fucking forest. So you remind yourself this. But once you start really paying attention here, and you're doing some demo trades on 15-minute, 1 hour with the X mode, you will start to get an idea. And this idea is going to build in your mind like an experience, and you're going to be able to tell. You're going to be able to tell when markets are behaving the way they should with the levels, and when it's not. And when it's not behaving the way with the levels that we wanted to or we expected to, you just fuck off. Like, just don't touch it. Don't, seriously, just back off, because there's something there's something happening that's not working within the model that you usually trade on. Now, X mode works almost all of the time. Like, it's extremely good at predicting where the buyers and sellers are going to be. But there are certain times, like with CAT JPY, where whatever the ideas of X mode has, it's just not really being respected, and that tells you to fuck off. Go to a different market. Don't waste your money here. Okay.
You know what you can see here is that this is what we should be seeing literally right now. From a structural perspective, the price action looks very similar, right? But here, the market did exactly what we expected it to do around that resistance level. You can see it dump down very quickly, and you can see here the sellers then all realized, oh shit, this shit's going down again, and then the neutral level was respected right there as well, with the break, retesting, continuation to the downside, okay? Here, the neutral level was absolutely not respected for the second retest of it, and then it moved back up, and again, as Asger just said, we've just got this fucking around here. This should have fucked off as soon as it hit that level, if we were going to see that same thing happen again, all right? Now, this chart is completely fucked now, but we should have seen this fuck off just as quickly as it fucked off right there. Okay, for this to be operating in the way we want it to be operating around our X mode levels. We know that it's not doing that. So that doesn't mean we start buying it. It just means we go find a market that is operating in a fashion that we do want to see. Okay, the market's showing us what we want to see. This market's not showing us what we want to see. Yeah. And if no markets are showing us what we want to see, then we don't have to take a trade. We don't have to go and force a trade on anything. We just wait for the market to show us the things that we want it to see. We want it to show us that it is going to respect structure again, is going to respect these levels. Fran is about the same one. Aussie dollar, Japanese yen. I would say so, because CAD yen, Aussie dollar yen, I would say they're very similar. But yeah, we'll just have a quick look.
Have a quick look.
We'll have a quick look, and then we'll sign off, all right? And then we'll sign off. It's 12:49 here in Brisbane, Australia.
Nice.
what do we got here?
Well,
Yeah.
zoom out.
So you go, mate, go. Sorry.
I don't know. I need to look a little bit more. I haven't looked at this. But so I would zoom out. I would start by zooming out. Like I'm just seeing this market. Like the way I approach this market is the same way many other people approach the markets. But I really pay attention to the price action with the levels. That's my key. That's what I do, because and that's how that really works so well. Like really, really well, right?
Okay, so that's the 4-hour time frame. We can see it's been respected quite a few times already. Like a lot of repeats here on this neutral level.
Yeah, so this is just like a broken level, and you can even see on one day time frame here. This is supposed to be a support level. It's still standing as a support level barely, because it never really reached extension 2. It's still standing as a support level. It has a chance that it can be, but I don't think this is done fucking around. It's much more likely it makes like a bear flag or something like this. So what is one day telling me? One day is telling me that it's sort of consolidating below support. It's looking like it's building a flag, basically, some sort of pennant or flag right now, right? Mm-hmm. So can you just give me like a flag, Tom? Some sort of just connect the two outer trend lines on the bottom end. Yeah, you got it. Yeah. So what am I reading from this? Well, I'm reading that a ton of retail traders is seeing a bear flag here. Okay, there's a ton of retail traders that's seeing a bear flag here. So they're gonna try to either buy the breakout, or they're gonna try to position themselves for the breakout. So I'm keeping in mind what these people are doing. Okay, that's what I'm thinking about. I think like, okay, these idiots are gonna try to buy this if it breaks out either way. So that tells me whatever they are doing, I want to do the opposite. That's the first thing. So now I want to go to something like 4 hour. Let's have a look at 4 hour now that we've seen this structure. Okay, so now we've seen this, and we can see that neutral level, which really has been tested again and again. So let's mark that out. So we have that neutral level, and you can see previously this was tested, and it was continuously rejected down. But as you can also see, it's holding and it's slowly building up. Now, now this market is in a really funny place right here now, right? Because it's borderline. It looks like it even just trapped some people trying to do like a breakout trade, but it's really just in a position where it's like it's not really that interesting to me. Where would this market be interesting to me? It would be interesting for me to short this at resistance, because it's a downtrending market. If it gets back up to this resistance level, I know by the time it gets up to the resistance level, it will have fucked so many people on the way there that it's now ready to move down. Often there's like an idea in trading that whenever you have downtrending markets, people tend to just pile on like shorts. Like if there's like a really bearish sentiment around a specific market, people just tend to just like pile on with their shorts, and that often means that if someone is running any sort of algorithm, like if you're an institution and you're looking to offload AUD JPY as inventory in your book, right? If you're looking to do that, well, the problem with having people file on so many shorts, the problem with this is that they kind of take away the liquidity that you needed to sell into. Okay, that's your problem. You needed that liquidity to get out of your position. Now you don't really have it, or you do have it, but you have to move vastly further down. So what can you do as an institution? Well, if you are in a position to move markets, what you can do is that you can just move it up a little bit before you continue your operation of selling it down. What do you get from this? Well, you get the opportunity to sell at a better price. You get the opportunity to take out a lot of people who have put positions on shorting something that looks like a bear flag. So that's good. And in general, it makes sense. Like if I have to offload, let's just imagine 10 billion of this, 10 billion of AUD JPY, right? Like if that's my goal, I don't mind spending $200 million to move a little bit up if it means that I can improve my P&L by a certain amount that's higher than the 200 million it's going to cost me to move it up. That's perfectly fine. So that's that's something you can think about, like how these positions and these patterns are being used against people. So what does it mean for us and our strategy? Well, we don't really short support. It's not really interesting to us to do it. And even if we were to short support, which means we would have, if we were to short this market, which means we would be on 4 hour, there was a time and place when it was a really good opportunity to take that short, which was earlier, just like gold. It's the same with gold. The opportunity was there. You could do that. You would probably get 2 good TPs. Nice. That was the time or place to do that. Now it's a different time or space, because now where we were expecting the sellers to be, they're not there anymore, because they already offloaded all their inventory, right? So that's problematic for us if we want to sell the same place where we expect the sellers to be, but they already been selling this area for nearly a month. So it means that, like, you can't expect people to keep selling the same level, you know? You can't expect the sellers to keep selling their inventory at that price, because eventually you're going to run out. And that's where you start to have these moves upwards. And the first idea that this is going to move upwards is that you can see that this market is creating higher lows, while it's taking out our neutral level. And it's not that we fully expected neutral level to be like a massive resistance. So it's very noteworthy to us. Like, we really want to pay attention that we can now see that this market is trading above neutral. When it's trading above neutral the way that this market is doing right here, it is telling us once again, end level, the neutral level, is being fucked around. It's getting chopped up. It's not reacting anymore like it reacted the first time. And that's because you don't have the same profile of sellers there available. So we don't want to end up in a situation where we're trying to perform a trade that already played out a month ago perfectly, which is what the system is designed to do. Execute that trade maybe a second time, but third, fourth, or fifth time when it's coming up, there's a much higher chance that the level will be taken in this case. So I hope that helps.
Yeah, for sure. Alrighty then, guys. Thank you very much all for joining. Everyone who stuck with us this whole time. A long stream today. Thank you, Asger. I think this is probably one of the streams for the books, mate. This is a good one for sure.
Oh.
This is one of those ones that, you know, everyone should watch back a few times, I think. So well done, everybody who hung around. Thank you very much, Asger. We appreciate you joining whenever you can. We know you're a busy man. So thank you very much. All right, guys. Thank you.
Take care, everyone. Bye-bye.
Talk to you all soon. Bye-bye.